In this section, we're going to talk about working with business owners. What a tremendous opportunity. I mean, first of all, it's daytime work. You can go visit them at their place of work during the day. They have many needs. Think about it. Their own retirement. You can set up plans for their own retirement. IRAs, you can set up 401ks, you can set up SEPs and Simples, 412E plans, which is the former 412I plans. There's many things that you can do for the business owner for their very own retirement. Their own estate planning. Business owners have great estate planning needs as well. You can set up benefits for their employees. Everything from health insurance to 401ks, key person insurance. There are many opportunities. The one I'm going to really kind of focus on right now, because we've kind of touched on some of those other ones, is business succession planning. Now here's what I would tell you. If this is your first time going in working with a business owner, I would advise you to work with an experienced agent who knows how to do all of this, all right? This is kind of not a do-it-yourself project. There's a lot to know, and the best people I know that work in the business market are the ones who ask the very best questions. I mean, they'd come in and they'd ask the business owner, tell me about your business. How did it start? And they just start asking a lot of questions. You know, one of the questions you want to ask is, how much longer does the owner want to work in the business before retiring or doing something else? What's the annual after-tax income that that owner wants after retirement? And to whom does the owner want to sell the business? Some other questions. Who are the key players? Has the ownership already been promised to anyone other than the current owners? Which family members are currently active in the business, and which family members do you know for sure they're not going to be in the business? Which ones do you hope are going to be in the business? You know, what is their commitment to the business? Has a promise been made on who will take control? Are there family members who are not involved in the business but maybe want to have part of the ownership of the business? Is there a long-term business plan? You know, why is the business profitable? What are the weaknesses? What is the profitability of the business if you're not there to lead it? How will the business creditors react if somebody dies or becomes disabled? Would the owner consider selling it to an employee, a key employee? Are there any key employees who could actually afford to buy the business? How important is it to guarantee that your business will be controlled by the parties that you want? Those are all important questions. Does your largest customer account for less than 20% of sales? If they're all concentrated into one customer or two customers and those customers go away, the business can go away. Do you have multiple suppliers for products or raw materials? Do you have systems or processes to properly manage the business for the future and to provide the level of service that your customers would expect? Does your business have opportunities for growth and geographic expansion or product line extensions or new channels of distribution? Do you have excess capacity to support the future growth? You almost really want to do a SWOT analysis. What are the strengths? What are the weaknesses? What are the opportunities? And what are the threats? When a business owner dies or becomes disabled, many times the business itself dies or becomes permanently disabled. And not because they did something wrong, but because nothing was done. And so we've got to set up a plan to protect that. And so there's several types of agreements for selling a business. You know, they can be a cross-purchase plan, a redemption plan, or a wait-and-see plan. The cross-purchase is where the owners basically take life insurance out on each other, and if one of them dies, the other one can get the business. A redemption is where the business itself would buy out one of the owners at some point in time, and a wait and see allows some flexibility for the future. How are you going to fund this succession plan? Well, you could borrow money, you could establish a sinking fund, you could do installment payments. The problem with those is if somebody dies too soon, none of those are really going to work. And so the fourth one is using life insurance. And life insurance is really the most effective way to help a business with their succession planning, because it provides the exact right amount of dollars at the exact right amount of time, and you can get it for pennies on the dollar. So the benefits of creating a succession plan is it creates a guaranteed market for the business interest. It allows those who are interested into continuing the business to do so without interference from the deceased owner's family. It ensures that the decedent's heirs will receive a reasonable price for the business interest. It provides liquidity for the estate of the deceased owner by turning the business interest into cash, and it establishes a value for the business for tax purposes. You know, again, when you're working with business owners, it's a tremendous opportunity. Help them with their own retirement, help them with their own estate planning, help set up benefits for their employees, and help them make sure the business goes the way that they want to. And again, work with an experienced agent, because if you do 2 or 3 of these cases with a very experienced agent, you're going to learn so much more, and you're going to make more money because they're going to find more sales that you wouldn't even been able to find in that situation.